you would always want to be on the side of having good credit.
Do you think it pays to have good credit? Okay, y'all, in this episode of It Pays to Have Good Credit, we are bringing on the owner of Solid Foundation Finances. Man, how you doing today?
Man, I'm doing good, brother. What about yourself?
Doing well. Just a little cold here in the Phoenix, Arizona area, man. We just moved here a few months ago and coming to the desert from Louisiana. I didn't know it would get so cold here, but man, we woke up this morning. It was 38 degrees outside, and I almost had to get my jacket for a second, but it's slowly warming up, man. But other than that, I want to make this episode to go over a few financial topics that's been sparking the interest all over the internet from people that's in this field. There's been rumors of mortgage companies no longer requiring credit scores. We're going to go over some of the crazy laws that us in the credit repair industry must follow. So we're going to break it down, go one by one, and just get opinions from both of us here, man. So the first thing I want to go over is Fannie Mae removing credit scores from mortgage applications. Now, some of this, in my opinion, is a little misleading. So I believe it's stated that as of November 16th, 2025, based on the last time I looked at it, not sure if it changed or not, but it stated that they are no longer going to require a minimum credit score. I believe the previous minimum score was 620 or 640, something like that. And they are going to remove that. So now people with 500 credit scores can so-called get approved for a mortgage. But once I actually read into details of that, it pretty much stated that the actual score isn't going to be a approving factor. It was just going to eliminate the score for being a initial yes or no answer, because your credit score is honestly just a tool for lenders. It's just a quick yes or no for lenders to let them know if they should waste their time or not with this potential consumer that's applying for a mortgage. And if their scores are above 620, they can move to the next step. If their scores are below 620, they don't have to waste their time, and maybe they should work on their credit. So based on removing credit scores from mortgage applications, it's stated that their credit profile will still be a factor, which means they're still going to look at credit card usage. They're still going to look at late payments. They're still going to look at collection accounts. So in my opinion, I believe this article is a little misleading, because I think it's helpful for those who don't use credit today and they haven't used credit in a while. Therefore, their credit scores have decreased over the last few years because they haven't financed anything, or they probably just paid everything cash. So for those people, man, that could really help them, right? Because they don't have to go get an unnecessary debt just to raise their credit score to purchase a mortgage or purchase a home. So, in my opinion, yeah, that would help out with them. But a lot of people, especially customers that we are helping in the credit repair industry, they see something like that, or they see the headlines of no minimum credit score required for a mortgage anymore. And people with 400 credit scores, and they got 15 repossessions and multiple bankruptcies on their credit, they're jumping up in the air right now because the headlines is a little misleading, in my opinion. So what do you think about that, man? Do you think that not requiring a credit score to apply for a mortgage is a little misleading or pointless if they're still going to view your credit report and many of the other things that's going to lead to factors that could reject or approve their application? How you feel about that?
Man, I think it's very misleading because I always tell my clients it's more about your credit profile than your credit score.
There you go.
So because the credit score is just a number, it's more
Right.
about your credit profile. So about the history and what you have going on. So still the fact of the matter is you still gonna have I think you still gonna have to have good credit to get a
Oh yeah,
house
for
because
sure.
you got to think nobody want to give $200,000 to a baby. So if they look at your credit score and don't see that you have anything going on, they still might not give you the loan. But at the end of the day, if you have the income to do it, and you probably can get by some of those credit rules, but you probably have to have a crazy amount of income though.
Right.
So that's not going to help out the average, majority of the population to me.
Absolutely. Yep.
So
The next thing, I just interviewed James Joseph. He's out in the Dallas, Texas area, and he owns bettercreditforyou.com. And I was speaking with him because he's very experienced with the mortgage industry and things like that. But Trump, I believe the White House or the Trump administration, they were trying to push a 50-year mortgage term. I don't think it ended up working because of the backlash and stuff like that. But, we have 15-year mortgages, we have 30-year, and then we had a 50-year. Now, two things sound crazy with this. So, going from 15 to 30 years, that's reasonable, that's realistic. But then going from 30 years to 50 years, man, there's some people who don't even live to see the age of 50, sadly, just due to health issues or something could happen or something unexpected, a car wreck or injury or anything like that, sadly. But the average age in today's world of someone buying a home is probably in their late 30s because of the
Hmm.
inflation and just how horrible the economy and stuff is. So if somebody isn't able to buy a home in their late 30s and then they're pushing for this 50-year mortgage idea, they're going to be almost 80. They're going to be past retirement when it comes to paying off this home. Now, I'm pretty sure banks have stipulations and they're probably only advertising that to people in their 20s and buying a home for the first time. And it's just a way to lock them in by saving a few $100 a month because they may be able to get approved for a home in their budget if it's at 50 years opposed to 15 or 30 years. But that goes back to my next thing. Going from 30 years to 50 years, I think we did the math. It's only like $200 or $300 difference that they're saving opposed to a 15 to 30-year loan. They're probably saving $400 to $600 a month. So, a lot of people are like, oh, well, a 50-year mortgage, they need to do this because it's impossible to buy a home right now. But then you have the smarter people that's looking at the numbers. And if you actually do the math, you're paying hundreds and hundreds and hundreds of thousands of dollars of interest to the bank if you finance a 50-year mortgage term. You're still doing that with 30 years, but it's like three times worse when you go from 30 years to 50 years. So how do you feel about the idea of a 50-year mortgage term? Do you think that's just completely insane, or do you think it's more helpful than bad? How you feel about that?
Man, I think it's a bad thing all the way around. I think it's a bad thing for generations. It's bad for the people. Once we make our lifestyle, we're able to be accustomed to it. We get accustomed to what's going on in our life or what bills we have. And
Right.
paying off a 50 mortgage. Most people retire at 60 years old. Most people probably buy their
Yeah.
house around 30. I'll
Right.
retire around 62, 60 or whatever. So basically, it's kind of setting you up. If you pay for 30 years, you on a retirement line that your house is paid for, and you can
Absolutely.
just move on. And
Right.
paying in a 50-year mortgage, you will never own that house or you can never pass it down because you still owe 20 years on it. Not saying if somebody passed out of 60 or whatever,
Right.
after the normal 30, you still owe 20 years on this house.
Exactly.
And then which family member is going to want to take a note that still has 20 years on it? You know what I
Right.
mean? So
Right.
you're not doing no justice for your kids and the kids behind you with a 50-year mortgage. And you're
Right.
paying, like you said, mentioned before, you're paying thousands of extra dollars for this house that, you could have just really budget down, got accustomed to, and paid that 30-year mortgage. And the thing that
Hmm.
people don't understand is, a lot of times when the economy go up, I mean, the economy, the money go up, our jobs go up or whatever, then,
Right.
the mortgage tend to seem cheaper than everybody else mortgage around that get a new house, you know what I mean,
Right.
after a
Right.
certain amount of years because of the equity in these houses.
Yep.
So at the end of the day, man, I think that's a terrible, terrible, terrible idea with 50 years. I honestly don't think it helped nobody but the bank because,
Oh, for sure.
because
Yeah.
you always under them. Like they got you by the chokehold, you know what I mean, to owning this
Right.
house. So 30 years is really pretty much perfect, you know what I mean?
Right.
And if you could do it in 15 years, if you could budget and do it for 15 years, imagine, you know, having the biggest expense paid off. You know what I
Yeah.
mean?
Yeah. For sure.
Instead of carrying the biggest expense for 50 years. That's
Yeah,
crazy.
yeah, and I preach this all the time to a lot of the customers who sign up for StirGusCreditRepair.com. A lot of these people that's in the credit repair industry are trying to push people to get in more debt. I don't believe in putting yourself in debt or fixing your credit to get in debt, because what's the point of doing that? And you're just going to put yourself in the hole again. The whole idea of helping some of these people, at least the clientele that I market to, I try to push people to use their credit to purchase their first home, or
Mhm.
refinance, or purchase a second home, or whatever the case is, because that is eventually going to eliminate the biggest expense that they have every month, is their housing expense. So if you're using your credit to purchase a home, clearly not everyone has 400, 500, $600,000 saved up in their bank today to just write a check for a home. So if you
Mhm.
can get a head start and use your credit to get ahead on lowering the biggest expense that you have every month and eventually pay off that debt, then you can use that money to invest. You can save for retirement better, or whatever the case is. So the whole idea of somebody getting a 50-year mortgage, that's just setting you up for making profits to the bank at that point. You're not going to do anything for yourself at that point.
Yeah, I agree with everything you're saying, man.
Yeah.
That's a terrible idea. I'm glad they shot it down because, I thought the numbers would have been like 150 to 200 a month, maybe, or
Yeah.
whatever. Because once you, people also need to do research before they buy a house.
Oh, for
Just look
sure.
at just look at if a family member, if you have a family member, just look at their bank statement and really see how much you paying towards the principal. And
Oh, yeah.
if you could, and where everything else go at, and if you could look at how much going towards the principal, you definitely would change that 50. You'll
Oh, for
change that
sure.
50 with mortgage idea. It might sound
Yeah.
like it's saving you almost. Because what I'm thinking is most people doing like the simple math and thinking, okay, well, if I got let's just say it's 60 years, we're gonna make it easy. The 60
Yeah.
years mortgage, and if your mortgage note 1,000, well, if it's 60 years, it's gonna be 500. Not
Yeah.
knowing that's not what it is. You know what I
Right.
mean?
Right.
You saving, depending on how much house you buy, 150 to $300 a month. You know what I
Yep.
mean? And
Exactly.
and the thing about it is, you should really also look at how much will you be paying for this house at the end. You probably could have got about two houses with a
Yeah.
30 year. You know what I
After the
mean?
interest and
So
everything.
yeah, yeah, we have the interest. Yeah, most definitely.
Yeah.
So
And that's
um,
another thing that I had a conversation with James Joseph that I had on my previous episode. He's out in Dallas, and he brought up a good thing. He's like, well, look, buying a home, that sounds good, but initially it's not an investment. It's not an investment until it's saving you money. The whole idea behind using your credit to purchase a mortgage or purchase a home with a mortgage is because eventually that mortgage is going to be paid off, and
mm,
eventually you're going to have a $0 housing expense opposed
yeah.
to a $2,000 a month rent or mortgage payment. So, no, buying a home right now today is not an investment if you're paying on it every single month, because you have property taxes, you have repairs, you have house improvements, you have
Mhm.
home insurance, you have all of these other things, and then you have a 6 to 7% interest rate. So I mean, you're not doing anything. And a lot of people, they argue, oh well, I bought a home for 300 grand 10 years ago, and right now is worth 380 grand, or is worth 400 grand. You probably, yeah, that's a good little increase in value, but did you really profit as much as you thought? You did not profit $100,000, because you
Mhm.
have your mortgage payment, you have interest that was added, you had repairs, you've had upgrades and add-ons. You're not
Mhm.
really profiting $100,000. But what I'm getting at, buying a home right now is not anywhere near an investment until it's saving you money or making you money. And that's a big understanding. I mean, a big misunderstanding that a lot of people have today, which leads me to my next question here. This whole idea of this 6 to 7% interest rate on homes today, I think a lot of us, including myself, someone who personally purchased a home when interest rates were 2 to 3%, and now had to purchase a brand new home 4 months ago, when the rates are double what it was a few years ago. Man, homes these days are not cheap, right? A
Yeah.
lot of people argue that it saves them money to rent versus owning right now, because like I said, you have property tax, insurance, repairs, upgrades that you like to do to the home, versus rent. If something breaks in a home, 9 times out of 10, the landlord or the apartment complex, or condo community, whatever, they fix it for you for free. But a lot of people argue that buying a home versus renting is really no big difference, when years ago renting used to be considered stupid. Renting used to be a
Yeah.
waste of money. In today's world, it's like what and what, because you're paying 6 to 7% interest on a $400,000 home. That's over 2,000, or probably over $2,500 dollars a month, almost 3 grand a month, versus someone can just pay $2,200 for a 4 bedroom home in whichever area that they may live in. And if something breaks with the home or something needs repair work, they can at least get that repaired from the landlord for free. So, a lot of people are against the whole idea of having a 6 to 7% rate, because man, it's just so much more interest going towards banks these days, and then the homes are just getting more expensive. How do you feel about the market and the current interest rates today? Do you think people should just instantly jump on home buying right now just because they fixed their credit, and just because they're brainwashed into thinking that buying a home is successful? Do you think that is a smart idea for them to just immediately jump away from their rent lease and jump right into a mortgage? Do you think that is realistic?
I think that's situational basis, depending
Yeah,
on, your finances, for one or whatever, right?
perfect.
So basically, that, that's number one, But I mean, if you have a job and you making above decent money and you comfortable paying rent and you know that you can afford a house note, then I
Yep.
would ask that person, what you want to live for now or later? You know what I mean?
Mm,
Because if you saving that money now, that's cool and all, but in the long run, where it's going to lead to,
yep.
you're still always paying this rent or whatever. And like I say,
Yep.
when my clients typically they buy a house at these these interest rates or whatever,
Yeah.
I don't know if they're gonna go down. We know the market fluctuate, But I one of the things I always coach is, hey, just make sure that you can stand on top of this house note and you keeping your credit good, because if the market crash, where they have a time where they are offering refinances, such as like COVID time,
Hmm.
they were basically giving houses away with the interest rates we had. Maybe we won't see that again. You know what I mean?
Right. Who
But
knows?
at the end of the day, it's all of that is situational basis.
Right.
Where you see yourself at. Do you want a house that's paid off, or do you want to pay rent for the rest of your life? You know what I
There you
mean?
go.
You saving money now, but later on down the line, 30 years from now, you could have had got all this over with. So,
Right.
and then, when you really think about it, like when you're renting, um, I have a house for rent, and I preach to the people that rent my house, you could get your own house one day, you know what I mean? But
Hmm.
when you're renting or whatever, you thinking that you don't have to worry about fixing this or whatever, right? Like fixing this issue and that issue or whatever. But to be honest, you actually paying for that issue to be get fixed
Right. Right.
when you're really thinking about it,
Hmm.
Um, but like I said, man, that's all situational basis. I think everybody's shoes is different. You need to do what's best for you. But I always preach getting a house, because at the end of the day, either the interest rates they'll drop again or they're not getting any lower.
Yeah.
And you don't want to be stuck for the rest of your
Right.
life to your rent,
Right.
because at the end of the day, then I'd rather preach a 50-year mortgage than not having, well, not really, because I'd rather pay rent for 50 years, because
Hey, yeah.
yeah, I'd rather pay rent for 50 years, but you get what I'm saying, man.
Yeah. Yeah. 50-year mortgage. That's a
Yeah,
50-year
yeah,
rent payment.
yeah. That's why I say like 50-year mortgage. I mean, nah, you know what? I didn't
Yeah.
even think about that option till I just said it just now. But no, I'd rather rent. I'd rather rent
Yeah.
than take a
Yeah.
50-year mortgage.
Yeah.
But
Absolutely.
yeah, man, you just really gotta, write your finances down and see what's best for you. But I
Hmm.
preach getting a house, man.
Yeah, I mean,
Um,
if it's something that eventually eliminates the most expensive thing that you pay every single month, regardless if the rates are 3%, 5%, or 12%,
yeah.
eventually, if it's going to be paid off in 15, 30 years, 15, 20, 30 years, then that is going to save you in the long run, versus renting and renting and renting until you're 80 years old, opposed to paying off a mortgage in your 50s, and then you have all these other years to save up for retirement, investment
Mhm.
accounts, stocks and index funds, mutual funds, whatever the case is. You have all this extra opportunity to dump 100% of your money, or at least 100% of your available money in investments that's going to set you up for retirement, opposed to paying a mortgage or paying rent, in your 60s and 70s and things
Yeah.
like that, when you should have already had some of that money saved up.
Oh yeah, man.
Yeah.
But yeah, but most definitely, man. Another thing is like I also preach about, man. If you could, like him as humans, babies, kids, everybody, we adjust to our lifestyle, right?
Hmm.
So I even suggest like if you can make enough money to pay a 15-year mortgage and be comfortable,
Yeah.
go ahead and do it because what you did was you set a different goal for yourself. And
Right.
once you start making, that and paying that mortgage on time, that become normal. You know what I
Right.
mean? That note become normal. That mortgage become normal. And
Right.
after 15 years, oh my God, you know what I mean?
Yeah.
Like, like if I did that right now, I mean, if I started that, I'd be 40, maybe 42 if I did 15 years.
Yeah.
And I have a house paid off.
Right.
That's the
Absolutely.
biggest expense.
Yeah. Yeah. Exactly.
You
Um, no,
you know,
I follow you.
and like when we live like that, man, I feel like you have chains on us. You know what I mean? Like you
Hmm.
kind of, if you make this job, I don't want to say you're a slave to the job. I don't want to use that term, but at the
Yeah.
end of the day, you pretty much are slave to these jobs to make this mortgage payment, right?
Yeah.
But when
Absolutely.
you got that biggest expense, you're not gonna stress about that job as much because you could go get another job and your light bill, your water bill, your little stuff is paid. You know what I
Yeah.
mean? Because the biggest
Absolutely.
expenses is over with.
Right.
But
Right.
so basically it almost sounds like freedom, you
Right.
know?
I'm gonna twist it up a little bit. What about
So,
your people that are out there? And I hear this a lot from customers. Like I said, whenever people sign up for Sturgis Credit Repair, I mostly market for people who are trying to use their credit to purchase a home because eventually that is going to eliminate their biggest debt or their biggest expense. And eventually they can no longer have that mortgage or, not have a housing expense, don't have to pay a mortgage, don't have to pay rent, and majority of the money can go towards investment and retirement after the fact. So a lot of people tell me, oh, well, I'm gonna just continue renting, or I'm not gonna worry about paying my house off anytime soon because eventually you're never gonna own a home because you still have property taxes and you still have home insurance and things like that. If you don't pay your property tax, the government can just take your home. So I kind of understand the mindset of some of these people. And look, we can argue that there's nothing in this life that we're going to own. We're going to die
mhm.
that item is just going to go to the next person or next agency or next consumer, right? So
Yeah.
what I'm getting at, I would much rather, pay property taxes a few $100s through the year, or even if it's a little over $1,000 or whatever it is throughout the year, and then home insurance than paying $2,000 or $3,000 every single month for a mortgage. I think a lot of these people are in a situation to where they're so far behind and they just don't want to see themselves doing better. They don't want to see themselves using credit to get them out of debt sooner by paying off their mortgage eventually. And a lot of people just give up and they're like, oh, yeah, I don't see myself not being in debt. So it's pointless to pay off something eventually because if you don't pay your taxes, then they can just take it. That just seems backwards. I would much rather have a paid off mortgage. And the only thing
Mhm.
I have to worry about is property taxes once a year, right? So, I mean, how do you feel about that when some people are like, oh, I'm not worrying about paying off a mortgage because I'm still going to owe something on it?
So what I would do is I would put it in the perspective they could relate to, which is a car note.
Yeah.
Majority of people had to get car notes. I'd be like, all right, you got to pay insurance every month, right?
Yeah. Good,
What
good
about that
idea.
car note? Don't it feel good when you don't have a car note?
Exactly.
Not think, don't it feel good? You
Yep.
just paying insurance.
Yeah.
Some
That's
people
the
do it
only
every
thing.
6 months. All you got to worry about is the insurance.
Right. I
That's
mean,
it.
yeah, like some of
But
these
you,
guys, they out here with $1,200 truck notes, and I'm sure they would be glad to not have a $1,200 truck note, and the only thing that they have is, a $150 a month insurance bill, opposed to over $1,000 a month in car payments.
yeah,
So I think what it is, a home just costs so much more money than a vehicle, and it's hundreds of thousands of dollars. And a lot of people don't see themselves paying that off. So they just use the excuse of, oh, well, you're still going to owe taxes. You're never going to own a home. So it's pointless paying it off. I think a lot of people use that to try and justify their way of never getting out of debt with a home.
Yeah. And I mean, man, bro, like, don't get me wrong, a house, it sounds scary you know, when I first heard, it used to sound scary.
Yeah,
Like if you hear 200,000 or 250,000, right?
right,
But a car that you pay $40,000 for don't sound scary.
right,
Something that's not gonna last longer than that house.
right.
You
Exactly.
know that when you drive it off that lot, that you cannot sell it for with the price that you bought it for.
Right. Yeah.
Just like, you earlier you spoke, you was like, yeah, you buy a house 300,000, 10 years later it's worth 380, right? You
Right.
still could sell a house and you could be, free from it, right?
Right.
When you buy a
Exactly.
car at its top tier price, when you first get it, you can never sell it again and be free from it.
No.
You know what I
No.
mean? So I try to, explain that to people that like to get the $1,200 car notes or whatever, that, you'd rather do this, right? Than buy a house. You know what I mean?
Right.
Like really think about it. Some people get cars every 6 years, 7 years. You know what I
Right.
mean? So
Right.
you getting 50. They got trucks that I work with people, man, that get a 80, $90,000 truck. You know what I mean?
Right.
Two of those trucks could pay for some houses.
Yeah. Yeah.
You get what I'm saying?
Right.
And like, I know I probably went a little left with it or whatever a little bit, but man, it's just so much, we really can't even get in an episode about, the way people have these thoughts. If you really break it down and really just watch it from another perspective or whatever,
Mm-hmm.
then you will really understand that, some of these things that you like, oh no, I'm not getting no house and I pay rent or whatever. Add your rent up for the next 30 years.
Yeah.
Just add that up.
Right. And that's another thing, like I spoke on a few moments ago, man. It's just like using your credit for anything besides buying a home, in my opinion, is just absolutely just it's setting you up to just be stupid, and I know that may sound harsh, for somebody that's in the credit repair industry and someone that's helping people improve their credit. But I'm a big believer in the only thing you should be using your credit for is to purchase a home, because like I say, eventually that is going to eliminate the most expensive bill that you have every month. If you go out and if you're able to improve your credit scores and you go out and use your credit to buy, a brand new Tahoe that's worth $80,000,
Yeah.
well, like you said, as soon as you drive off the lot, man, I mean, you're not going to be able to trade that Tahoe in and get your money back, or anything like that. That is going to depreciate. That's not making you any money. And then you have all of these people that's in the credit repair industry or so-called business funding industry, which I don't really agree with as well. But, maybe someone can prove me wrong. But, a lot of people are advertising, oh, fix your credit and you can get all of this business funding. But then you look at some of these business funding plans, a lot of people don't actually show in depth of what they're actually agreeing to. I seen a post the other day on social media. It was like, fix your credit. We can help you get $60,000 in business funding, which is a little misleading because business lenders will only approve you based on your monthly revenue with your
Yeah.
business. So, if you're not making over figures a month, it's highly unlikely that a lender is going to give your business $60,000. But anyway, let's just say that they are. Well, that 60 grand, one, it's probably going to be daily payments coming out of your business account or weekly
Mhm.
payments coming out of your business account. And man, the interest on that is going to be sky high. Your business is never going to be able to cash flow if you're making daily and weekly payments towards business funding. And 9 times out of 10, the people that they are marketing to is not going to use these business funds for business investments or
Yeah,
marketing
business. Yeah.
purposes or business inventory and things like that. They're probably going out and buying some sort of sports car or exotic car and claiming that it's a business write-off because they put a sticker on their car or something, and it's
Yeah.
making them $0 for their business. So a lot of this stuff, man, that people are taught to use their credit for, realistically is setting them up for failure. And like I said, man, I think the only thing people should be using their credit for is buying a home. And look, I'm not against buying a car for your credit because I know
Yeah,
that's pretty normal in
yeah, we
America.
have to.
But to a sense, it is a waste of money because you have that monthly payment every single month, which my mindset have changed over the last few years. I used to be okay with buying a car, but now, man, the way that these vehicles keep going up in price year by year. I mean, a regular Chevy 1500 Silverado, $60,000, $50,000, depending on the trim level. You get the base model, which I have, honestly, the
Yeah,
the Silverado Custom. That's all I need. And man, that
yeah,
was $40,000 at the car dealership, brand new.
mm,
And I mean, used, they're still 30 grand. So
yeah,
prices on vehicles have changed over the last 10 years. When I used to be in the car business, new vehicles, man, used to be able to get a brand new car for 16 to $17,000, like a Hyundai or a little, Toyota Corolla or something like that. And
hmm,
then the Camrys used to start at like 18 or 21,
yeah,
twenty-two
yeah,
thousand dollars. Now, man, your Toyota Camrys are $40,000. So I mean, yeah, cars are more expensive, and financing cars used to be a thing, but now I just think that's a little silly because it's just so expensive these days, man. Not against the idea of financing a
yeah,
car, because you can use that car and that car is going to get you to work and you're making money. Now, it is going to deduct from your cash flow, which people
hmm,
will argue is not going to set you up properly. That car payment can go towards stocks and investments, and put that in
hmm,
your savings funds and stuff like that. But what I'm getting at, man, it's hard to justify that in 2025 because you're financing something that's $60,000, and it's costing you $1,000 every single month. It's hard to justify that versus 10 years ago, hearing a car payment was $400 a month, right? That's nothing. People spend that every single month on groceries these days. So,
yeah.
times has just changed. And as time changed, my viewpoints and opinions changed on certain things. But yeah, man, that's all with that.
Mm.
I guess now we're going to transition more into our industry, more into the credit repair space for, either my audience or your audience that's watching or listening to this episode. First thing first, man, we're going to break down into some of these crazy and insane laws that monitor credit repair organizations. The first one, which is TSR, telemarketing sales rule, which is, sparking the interest of a lot of credit repair organization these days because some of the biggest companies in the industry recently got sued because of the TSR. So the TSR states that credit repair organizations are not allowed to sell credit repair over the phone, regardless if it's incoming or outgoing phone calls. So a lot of companies feel a certain way about this because if we're in the financial industry, what consumer on earth would feel comfortable signing up on a random person's or a random company's website and not scheduling a phone call with them to, one, see if they're a real person, two, see if they know what they're talking about, and three, just to see if it's actually legit, right? No one is going to
Mhm.
feel comfortable with that. If anything, that is going to encourage more scams upon our industry because if they never have to speak on the phone to sell their service and it's just through marketing ads or text messages, not text messages because that's apparently a violation of TSR. I mean, social media messaging and emails and stuff like that. If that's the only thing that the customer have to gain your trust, wouldn't that lead to more scams than being able to see if the business is legit or not? How do you feel about the TSR and not being able to make calls or receive calls and sell credit repair and have customers sign up for the service or pay for the service and things like that? Do you think that's something that should be lightened up a little bit, or do you think it's a good thing?
I think that definitely should be lightened up a little bit, a lot,
Yeah,
because at the end of the day, man, you want to talk. I want to talk. To be honest, I want to talk to the client and see if they're a good fit for my program.
there you go.
I would like the client to talk to me to see if they feel like I'm a good fit for them. To
Right.
see if we're a match. If you don't have that connection, then you're leading to scams.
Hmm.
I mean, just point scams and automated bots.
Yeah, yeah, that's it.
And I mean AI, so therefore, I think that's a bad idea because at least that person could gauge, at least that person could, you could be like, oh yeah, I did work with whoever they know already. You could really have a decent conversation with someone
Right,
versus them just signing up, spending their money, and
right.
then be like, hey, I'm a client and can't even get in touch with somebody.
Yeah.
So I definitely think that rule need to be looked at from a different perspective.
Hmm.
And I feel sorry for the incoming new credit repair companies that trying to grow and do the right thing
Yeah.
because how do you even grow without speaking to someone?
Right. Yeah, that's a big one there. And like I stated on the last episode with James Joseph, I feel like if there was a specialist or business violating laws in CROA, then I feel like they should have to follow TSR. Now, if your business is clean, there's no violations, and you've never been in federal trouble or state issues or anything like that, then I feel like TSR shouldn't apply to you. Now, if you're out here scamming and saying you can sweep someone's credit and delete everything off of someone's credit in 7 days, which is a lie. And then if you get caught doing that and you get a fine or whatever the case is, then I agree that they need to follow TSR. That's their
Yeah, yeah,
punishment. But companies like Sturgis Credit Repairs, Solid Foundation Finances, I don't think that TSR should be relevant to us because, like I said, we have a lot of customers who do wish to call and contact someone before signing up on a service. Now, I have transitioned my marketing and the business process and everything to where everything is 100% online and customers just sign up online. All the information is on there. So thankfully, they really don't need to speak to anyone anyway because they see everything and all of their questions are answered. But like you said, man, for the people who are trying to get started in this industry, the TSR is a little bit tough for anyone that's new in this industry.
yeah. You gotta have that reputation already.
Absolutely. And speaking of CROA, Credit Repair Organizations Act, there's a few things that is listed in that we must follow. We must follow. So, no advance fees, meaning legally we're not able to charge someone or make someone pay, let's just say $1,500 just to sign up for our service, and then we got paid before we even seen their credit report. They paid us before we even known
Oh,
that they needed credit repair.
yeah, yeah,
That's something that I can agree with. But I'm gonna also switch it up a little bit. I feel like that's also a little tough because now that's putting a price on someone's services. Now that's putting a value to someone's services. What
yeah,
if someone's been in this industry for uh, 2 and 3 decades and they don't have time to offer a free trial, or they don't have time to take people who just want to sign up for free and go through a 7 day trial or a 10 day trial, 30-day trial, whatever the case is. What if they only want to market to serious clientels? For example, right now I'm focusing on losing weight and I'm looking at some of these fitness influencers on social media that offer meal plans and workout plans and things like that. I see one guy, it's $8,000 for his plan. He's very popular on TikTok and whatever right now. You probably seen videos of this guy running and things like that. But it's $8,000 up front just to purchase this plan. And I don't know if this plan is even going to help me or not. It's just he has a big following. He has results with his body. He's showing himself working out and what he did from 8 years ago and what he is today. And he's just selling this plan, and it's legal for him in the fitness industry. But if somebody in the credit repair industry were to do that, it would be illegal. Not saying that you
yeah.
should charge $8,000. It can be $8 up front. It would be illegal because CROA states no upfront fees. So, I mean, in your opinion, how do you feel about the whole idea of no advance fees? And I want you to answer it in both parts. Like, I don't want you to just answer it because what if your advance fee was just a consultation fee and you only charge $50 to talk to you, just like some lawyers charge money just to talk to them, you know? So how do you feel about Croa stating that you can't charge a dime just to consult or just to start your process? And I want you to answer it that way, but I also want you to answer it, how does it benefit the consumer by not falling for scams that's charging $1,000 up front? You know, you see where I'm trying to go with that?
Yeah, yeah. Man, I actually think it's like that law, it could go either way for the
Yep.
consumer or the business owner. It got its pros and cons to, both. The
Right.
pros for the cons for us is we sit up there and we talk to somebody for 15 minutes, and then the conversation comes to trying to pick your brain and stuff like that, right?
Yeah.
Actually, we really that then it becomes a waste of time, because I don't know about you, but I do try to help people as much as I can if I have time.
Right.
But at the end of the day, I have a family, and a lot of people wants to book you just to see, just for free information, knowing they're not
Hmm.
gonna sign up.
Yeah.
Now, and that be the kicker with stuff, So that's big on our time, because if you're really looking at it, if we say time is money, we getting stolen. People stealing from us. You know what I mean?
Hmm.
If you look at it like that. Now, coming to the consultation, now if we were able to say, hey, our consultation is $50 or $25 or 30, whatever the number is, then if you sign up with us, that goes towards your first month.
Yeah.
We're going to get the most serious clients. You know what I mean?
Hmm.
That's, hey, I'm ready to sign up. So
There
it
you go.
basically, we're not wasting as much time. Not from the consumer end of it is, if they spend $30 with these different companies trying to get a consultation, and they losing out on money.
Yeah. Yeah.
But at the end of the day, it kind of contradicting, because now you got these companies, you want them to already pay without even talking to some. How it goes, they want them to sign up or whatever and go
Yep.
through your whole system without signing up, and then now you could be considered a scam if nothing happened.
Yeah.
It's just crazy how everything go. And I know I probably went left again with that, but it
Yeah.
just uh,
Yeah, yeah, and I know a lot of the bigger companies. Um, I mean, realistically, the law states that no advance fees are, you know, should be made until work has been performed. So a lot of your bigger companies, they charge a 7 day free trial period, to where, you know, nothing is charged until after 7 days. Legally, they could have done that after 24 hours if they wanted to, if they submitted everything within 24 hours. But then you have another thing as far as cancellations, to where consumers have 3 days legally to cancel your services. So that's why a lot of bigger companies that offer a short free trial period, they do it after that 3 day cancellation period that's guaranteed for consumers. So they just double the time frame to a sense. So a lot of
yeah,
your bigger companies, they offer a 7 day trial. Some companies offer a 14-day trial, 10-day trial. Me specifically, I just, my service is a 30-day increment service. So like, it's 30 days before I see the next report. It's 30 days before the next payment. It's 30 days before I see any type of updates or anything. And then the bureaus respond every 30 days. So, you know,
mhm,
I never really agree with the whole 7 day thing, because it just doesn't fit me. I feel like that would be more work for my business. So I just
mhm,
keep everything on a 30 window period. If you want to sign
yeah,
up, you sign up for free within 30 days. You have 30 days to cancel. So that's way longer than the 3 day period that we should, you know, grant the
mhm,
consumer. So by 30 days, people should know if they want to keep continuing the service or cancel the service if it's not for them. So you know, that's my opinion on that. So no advance fees, 3 day cancellation period. What's the next one that's in Croa? It is the misleading marketing. That's another one. So sadly, in 2025, man, realistic companies like Solid Foundation Finances or Sturgis Credit Repair, you know, we post actual results and actual time frames and realistic reasons why things can be deleted. But unfortunately, real results doesn't sell in 2025. People want to get up on TikTok and see some 10-second clip of somebody stating how they can sweep their credit profile within 7 days or 24 hours or 3 days or whatever the case is. Although this is obviously not true, and there's no way to delete everything on your credit within 7 days, people still fall for this. So how do you think this is even possible? Do you think it's just people just don't think for themselves? Because if every single thing can be swept or deleted off of your credit within a short time frame, bad credit would never exist, right? So how do you think people are even falling for this stuff?
What that saying is again, if
If it's
something
too
too good,
good to be true, it's not true.
that's right. So definitely, man. People like fast results. People like something to happen now. And I think most people wait until they need their credit versus getting it fixed before you need it. And I
Yeah,
think that's what the cause of,
they're
oh, he could
rushing.
fix mine now. Let me
Yep,
go to him because they're desperate. You know what I
yep,
mean?
yep.
And I think that's
And they
the
don't think.
no, they don't think
Right,
because I
right,
need this now. Versus if they come to you or they hear us talking about this video and they say, yeah, it takes time, for us to work on it because it takes 30 days for the bureau to respond. They
right.
don't want to hear that. They don't want to hear 30
No,
days. They
no, they
want
don't want to hear the
7 days
truth.
deletion, they gone.
Yeah, they want to
So
fall for some credit sweep and then they get scammed when they find out there's no such thing as deleting everything off your credit. And the whole idea with that is a credit sweep, which means most of these people are filing a fraudulent police report, which is a federal crime, and then stating that all of those negative items are not yours and you
yeah,
have identity theft and all this nonsense. Yes, when you send in a police report to the credit bureaus, yes, they are going to temporarily delete that while they do an investigation. Now, once that investigation comes back and you're liable for all of those accounts, that credit sweep comes back on you. So,
yeah. So it comes
there,
back
there
on
was a
you.
girl in Houston. She was just arrested like 2 years ago for filing credit sweep fraudulent police reports. And these people are so stupid, it came right back on them. So,
Yeah,
I get a lot of people who call, a lot of people who reach out to me and they're like, hey, can you do a credit sweep? Or, can you delete everything on my credit within 10 days? If not, I don't want to sign up. And I'm like, bruh, how do these people fall for this? It's just insane because
yeah,
if that was true, nobody on earth would have bad credit. It's crazy people fall for this stuff. I used to feel bad for people because honestly, I thought people didn't know much about credit because we weren't taught about this in school. So people didn't realize it's no such thing as deleting or sweeping everything off of your credit in 10 days. But it got to the point people purposely only wanted to know if you can delete everything off of their credit within a snap of a finger. So I just stopped feeling bad for people. I'm like, look, if you don't see that this is a scam from a mile away, that's your own fault at that point.
yeah, yeah. I mean, you gotta people make their choices or whatever. I mean, I learned that or whatever. I
Yep.
definitely, you can't save everybody.
No,
Like,
not at all.
um, like I remember one time when somebody was like, "Hey, you can get these inquiries off," and it was just something simple as an inquiry, and I was like, "Hey, you
Yeah.
don't want to get this one off anyway because it's yours. So
Yeah.
this is a real inquiry anyway. That
Yeah.
is because it's attached to a positive account. We
Right.
gonna leave it at that.
Yeah. They see the
So
account attached to it
yeah,
that you've been making
so
payments on.
yeah, so they tried to go get it from somebody else, and they closed their account. And I'm already knowing what's
Exactly.
happened. They
Right.
said that account, that inquiry wasn't theirs or
Yep.
whatever. That's attached to a positive account,
There
must have
you
sent the
go.
report. And then what happened was they closed their account and their credit score actually dropped from that. You know what I
Yeah.
mean?
For losing
From
positive credit history.
yeah, yeah, yeah.
Hmm.
And I mean, like I say, so basically me sitting up there being honest, and that's when it goes to me being honest and then telling you the truth. Hey, this inquiry right here need to stay anyway.
Right.
And you want it off because supposedly inquiries make your credit go bad, but I mean bad. Your score drop, but you don't want too many of them.
Right.
But they wanted them all gone. I told them the truth. They must have went to somebody else. They made it sound real good and juicy and stuff like that or whatever.
Right.
And then, you called me. And the reason why I know the story because you called me afterwards. They called me afterwards and asked me what else I could do about it. And I was like, oh, I told you about it. They must have disputed that inquiry we was talking about.
Yeah.
I was like, there's nothing that I could do about that now. And it was like, okay, they basically hung up because they were mad, but and I kind of said, I told you, not like I told you so. I probably did say it like that. I told you so. I ain't mean to do it though, but
Right.
yeah.
Yeah.
But no,
I had
I
a
mean, just go ahead.
Yeah, I had a crazy situation about 2 months ago, man. I had a new customer that signed up for Sturgis Credit Repair, and I told her, the very first round, it's 30 days before the credit bureaus even respond to us. And man, I kid you not, every 2 days she would call or send an email. Hey, what's the update? Hey, what changed? What's the update? And I'm like, ma'am, what are you expecting to happen here? There's nothing that's going to change on your credit report a day or two later. This stuff has to be mailed. All of our documents are mailed to the credit bureaus. It takes 3 to 5 business days for USPS to ship mail to the credit bureaus, depending on which state it goes to, and then the credit bureaus investigate that for 30 days. So she eventually was like, "Oh well, I seen this other guy. He's on Instagram and he can credit sweep me." In under 10 days and delete everything off of my credit if I pay him $2,500. And I said, ma'am, how on earth are you going to fall for that? Now, we offer a first month free trial. This guy is offering
Yeah,
2,500 to sign up and sweep everything off of her credit. That's two violations in one or three. Number one, advance
yeah,
fees, which violates the Credit Repair Organization Act to prevent scams like that. That's one violation. Number two, offering or stating that he or she can sweep their credit, which is illegal, which also isn't true, and then filing a fake police report claiming identity theft, which is going to come back on her anyway. That's a third violation. So I mean, I'm like, bruh, how do these people fall for crazy scams like this? And then they come back months later. Hey, I got scammed. I need to know exactly what you do, how you do, which you should have been doing that in the first place. I don't blame the consumer for trying to do their research and making sure they're hiring somebody
yeah.
legit. But at the
Hmm.
same time, you fail for something crazy and non-realistic. Now you think everyone in the industry is the bad guy, and someone that you used previously that did things correctly and did things by the law, you no longer trust that person, or you think they're the bad guy too because you fell for something that was stupid. But it's just things in this industry, man. It's like it's almost the same thing repeats itself, but then at a sense, it's like new stuff happens every single week. It's
Hmm.
like, man, I've been in this industry for years now, and still to this day, new stuff still happens that I haven't even heard of before. It's funny, but it's also crazy.
Man, it's crazy that you said that because I just had a client. I never had one this bad before, and she was like every 2 days, and I'm like, hey, hey, well, the first time she asked, hey, is everything all right? Is everything good on you? And I say, hey, yeah, we sent everything off. That's what that notification was about. It said it was sent.
Yeah.
I have an update in 30 days. 3 days later, hey, I'm just any updates yet? I'm like, I'm like, okay, so hey, ma'am, you will actually be able to see an update before I do. If you have Credit Karma, it is your Vantage scores, but you will be able to see if stuff in dispute, delete. It kind of lets you know before we know,
Yeah.
what's going
Yeah.
on a little bit, stuff happening. Another day later, hey, any update? You know, I'm like, and the thing about it is, I try to be, I do treat people with respect all the time, and I
Hmm.
try to make sure that, I'm doing the best I can
Right.
with respect and not seem aggravated. But, sometimes, man, when you tell someone, hey, look, in 30 days, that's when I'll be able to update you. That's just what it is.
Hmm.
We're not no magic genies, bro. We can't make the bureau say, hey, we go prioritize your letters or whatever. Think about that. You also got to be like logical and think about how many other people getting their disputes process. You know what I
Yeah.
mean?
It's like
It
10,000
didn't
disputes a
even,
day.
yeah, it's not even reaching your letter didn't even reach the inbox yet. You know what I
Yeah.
mean?
Yeah.
You know, so, just give it time or whatever, man. Just give it time and just be patient or whatever.
Yeah.
And stay off TikTok because, TikTok can have you thinking you could go get a $50,000 loan right after you create an LLC. I mean, with no credit.
Yeah.
I mean, like, so just
Yeah.
stay off of TikTok thinking all
Make
this
you go
stuff
from a
because
400 credit score to 800 credit score in 1 week.
yeah,
Sweep
because at the end of the
everything.
day, what that is people just want views. You know what I
Yeah.
mean?
Yeah.
And
They're
social
content
media is,
creators. They're not
yeah,
credit
content
repair
creators or
companies.
whatever. So they're making money off of creating these views, these videos that
Right.
got false information that keep getting shared. And what it
Exactly.
is it's making our business or us to actually operate our business
Yeah.
and make
Look
us
bad.
look like a scam
Yeah.
because it takes time. You know what I'm saying?
Right.
And you listening to this, so
Yeah, content creators versus actual business owners.
yes,
If they were, and this is another thing. A guy reached out. I want to say maybe 3 weeks ago from one of my social media ads, and the very first thing in his email, it was like, "Hey, there's a guy right now. He's in Miami, Florida, and if I pay him $2,000." He can sweep everything off of my credit within 10 days. However, he's only taking 5 clients per month. And I said, okay, what business limits themselves to how many customers they handle per? If you're in business, you're trying to focus on getting more customers, not less customers. That's like Walmart. If Walmart said, "Hey, we're only letting 5 people shop our stores every single month," they would never be in business. So the fact that this guy is stating he's only helping 5 people a month, one, he's a content creator, not a credit repair company. Number
yeah,
two, this method of this credit suite, which is, like I said, filing a fake police report, which is going to bounce back
yeah.
on you anyway. That's that's illegal. That's a felony. So, it's so many things going wrong with this, but it's like, man, people fall for these misleading things every single day and they don't want to hear the real. They just rather hear something on Instagram and TikTok that's not real.
So, so I'm gonna tell you, majority of that is a marketing tactic.
Yeah.
So, um, and that's really to make people jump on. Oh, I got to do this 2,000 now because there's only 5 people. Let me hurry up and get that. I bet you if
Exactly.
10 people in your house get, I bet you if 10 people in your house sign up at the same time, all of them,
Yeah,
y'all all
yeah.
gonna fit in them 5 slots.
Exactly. And I preach about this all the time, like
Yeah,
not just credit repair, but I have a lot of friends of mine. They see me start Sturgis Credit Repair from zero, all by myself years ago, and built what I have now with nationwide awareness, thankfully. But I have a lot of people that started a hot shop business, or started a roofing business, and started all these
man.
other businesses, landscaping and things like that. And a lot of people use me to a sense as not really a mentor, but more of guidance and advice. I guess that's mentorship, but not directly. But a lot of people, came to me for advice and things like that. And I said, look, growing your business in this world, you need some heavy marketing. Do not be like
Mhm.
these fools talking about 3 spots left. That is the worst marketing ever because one, you're limiting yourself. And two, yeah, to a sense, that's gonna make people be like, oh God, I gotta do it now. But to a sense, they're going to be like, oh, them 3 spots are gone. Or, I hear everybody claim there's only 3 spots left. I'm not going to take them seriously. No, you need to promote your business based on results of what you actually do, not based on how many spots you have left. Because if you're just stating that you have 3 spots left, no one is ever going to sign up for that.
Yeah, yeah.
It's just you have to show actual hard work, dedication to what you do, show that you actually love what you do, and provide results that you actually give for your customers. So, don't ever fall
So
for all this 3 spot left type of stuff.
yeah, I when I do like a sale, it's been a while since I did one because I tell people my price is already a sale.
Yeah. Yeah.
It's already a sale. But when I did one, I like to do it by like if I did a Black Friday, I'd say, hey, you have to the end of, 11:59,
Yeah.
this sale is gonna
Deadline.
be you got a deadline. So it gives everybody an opportunity to do it.
Right.
That's my thing. I did, see people, I did see people be successful with that. Saying it only got 20 spots or some XYZ or whatever, but typically I look at that from a different angle as a business owner now.
Yeah.
um some things could be treated like a hustle and some things could be treated like a business.
Yeah.
What do you
Yeah.
want, a hustle? You want a hustle or do you want a business?
Right. Exactly.
And
Yeah, that's true
that
because a business isn't making any type of marketing campaigns like that, limiting how many people can sign up for their service. They want unlimited spots available.
yeah, and they put the time on it. They give everybody
Hmm.
opportunity, a fair chance.
Exactly.
You know what I mean?
Exactly.
Not the first one sees it. Which that's crazy because, like I say, if you got 5 spots and 10 of us sign up, the 5 spots go fit all of us.
Yeah,
Um,
exactly.
but that's man, I don't like that type of marketing, so I try not to, even touch that,
Hmm.
I try to keep it as professional as I can, Um, it's, like I said, bro, you could really, it's a slippery slope dealing in this credit business or whatever that, well, the things you post or the things you seem could kind of, have you in the scams or whatever. And I'm trying to separate myself from the scams as far as possible.
Hmm.
So that's why try to watch what I post, watch what I say. I don't guarantee results. But at the end of the day, I guarantee the only thing I say I guarantee is, hey, look, if you follow my plan, our plan or whatever, and we stay consistent, we will see some type of results. Because if you building your credit score, if you building your credit profile and you getting the things that you need to build it, then you're going to grow. We're going to grow your credit profile. We just have to do it together. You have to do your part, I do my part, and
That's
we'll
it.
get somewhere. Um,
That's it.
and I did want to ask you a question, man. What
Yeah.
is your ideal client? Your ideal client.
That's a good one. That's something I brought up in a previous episode with James Joseph out in Dallas. That's really something that's very important, I believe, man, because yeah, you get into the credit repair industry and you hear a lot of these people, they're just marketing to everyone, but not everyone is going to be your ideal client or your
Hmm.
ideal clientele. You need to choose what is your goal with customers. Do you want people to just improve their credit and then they get in a bind again and then they're back in your system, which I guess is a good thing for the business. But if you really care about the consumer themselves, you want to better their life, better their lifestyle. So I focus on people that wishes to use credit to their advantage, which brings you to, or this slogan here, it pays to have good credit, which is
Yeah.
actually the name of my book there. So it talks about using your credit to advantage. There's a lot of people who hate credit cards because credit
Mhm.
cards, they are bad, believe it or not, if you use it incorrectly.
Yeah.
But me as a business owner, I use them every single day for my expenses. They're paid every single day. I'm not just spending on my credit card and hoping that it's going to be paid off. No, I'm spending what I already have in my business
Mhm.
bank account to pay for these expenses, but I'm putting it on my credit card and then transferring the money because I'm getting 2 to 3% throughout the year. And not it was probably not even 2 or 3 months ago, I posted to the It Pays to Have Good Credit Facebook group how I literally cashed out on I think it was over $2,000 or something like that over the last, I want to say 4 months or so. So, I'm
Yeah.
cashing out thousands of dollars every single year just using my credit card towards my business expenses. So, I mean, that's using credit to my advantage and it's not costing me any money. Same thing with a mortgage. Yeah, financing a home is going to cost you something, every single month. Buying a home today or financing a home today is not an investment because it's costing you money. It is a monthly expense. You have property tax, you have home insurance, but eventually using your credit to buy a home 15, 20, 25, 30 years from now, you're going to eventually eliminate your biggest expense that you have every month, which is your home. You no longer have to have a mortgage. You no longer have to pay rent. So, I mean, using your credit to your advantage and it's going to either make you money or save you money. That is my ideal clientele. Just like I have a lot of business owners, if you want to use your credit to invest in business inventory or business products, or you want to use your credit if you're in the painting industry and you have multiple employees, but you only have one van. Well, I agree with financing one or two more vans so that way you can
Mhm.
get to more jobs at the same time. But I am against financing a car for personal use. I see all of
Yeah.
these videos on TikTok and people buying these new F-250s and new Chevy Tahoes and they're paying 80 to $100,000 a month and they have $1,500 car notes. That is stupid. But if you're using it to make money, and I'm not just talking about financing a car and you going to
Yeah.
work, that's not a way to justify it. But if you're really using multiple vehicles to get to several different jobs and you're in those jobs are bringing in, way more money than what the vehicles are worth, then yes, I support that. So to answer your question, I know I kind of said a lot here, but to answer your question, my idea clientele are people who wishes to use their credit to make money or save money eventually.
Man, and I'm gonna come off piggyback off of some of the things you said. Like myself, I also look at it like, hey, buying vehicles is crazy. You know what I mean? Like for it's an $80,000 vehicle. You know what I
Yeah.
mean? That is crazy. And I also believe in using credit to make money. You know, you want to use credit. If you use credit, you know, you purchase your home, and then the other stuff is to try to see if it can make money for you. You know,
Yeah.
having debt is not bad if it's making money for you. You know, and
There
it's
you
paying
go.
itself.
There you go.
And like something about a vehicle, you know, I needed to buy a vehicle. I just bought one, right?
Hmm.
And don't get me wrong, I love the car, right? But
Yeah.
and I didn't go crazy like 80,000. I'm not doing that. But the fact of the matter was, it was like I really could have bought a cash car and been riding around, you know.
Hmm.
And I think about that right now because I didn't, you know, even though I wanted the car, you know, that's what I love the car now. Don't get me wrong, but self-consciously, if I said that right, if I knew, if I, if like right now, I think about it when every time I paid a note. Right now, I just got the car 3 months ago. I know that I could have been investing that money and doing something else
There you go.
to make my freedom. You know, to
Yeah.
sacrifice myself, even if it's putting that extra money on a house note. You know what I
Yeah.
mean? To
Yeah.
get rid of it or whatever. But you know, like I say, we also have to live, and you know, I understand all of that or whatever. But you know, and I'm blessed enough to do what I did or whatever. You know,
Right.
because once you have different sources of income, you know, you could kind of, you know, maneuver stuff, you know what I mean?
Hmm.
But at the end of the day, I still think about right now what I could be doing with that car note money to help me make money. And it's crazy, you know what I mean?
Right.
So I like if you listen to me, I bought a vehicle, you know what I mean? And it's not an $80,000 truck. And I still wish that I could have
Didn't have
probably
a car
not
note.
buy that vehicle and use
Yeah.
that money to be making to put. Bro, look, if you don't have a car note right now and you good and you could afford a car note, I promise you, if you be like, you know what, I'm gonna put this $600 in this stock or whatever to just, you know,
Yep.
leave it here. If
Yep.
you lose that money and you think, well, I don't got no car note, it's
Yeah.
not even gonna
Exactly.
mean anything because you're able to take a chance, you're able to shoot shots, you're able to invest, you're able to do stuff with businesses or whatever. You know what I mean? You're
Right.
able to make moves because a car note is a good amount of comfortable money that you can invest in, man. Take your shot or whatever. If you
Right.
got a dream or something, like if you wanted to, you know, some people pay like when you say $1,500, you know, I could tell a story, you know, like, you know, this guy paid $1,500, you know, note. That is actually, if you wanted to be in real estate and get you a duplex, that is actually a note for an apartment or
Yeah.
something, you know,
Yeah.
like
Absolutely.
that's what that is, you know, that's you could double if you know, imagine your note being $1,500 and let's say your mortgage $1,500. You know what I mean?
Right.
Do you know if you put that $1,500 towards the principal, you'll pay your house off faster than 15 years?
Yeah. Half the time. Yeah.
You know what I mean?
Or
So
less. Yeah.
so basically, like when you thinking about that type of stuff, you know, and I'm gonna go to my ideal clients because don't get me wrong, when a client come to me, I'm gonna try to help you reach whatever goal you want. You know what I
Right.
mean? But my ideal clients are the ones that want to learn, that
Yeah.
want to. I don't want to see them again. You know what I mean?
Right.
They're not
Right.
just trying to come to me and get what they need and then mess it up again. They really trying
Exactly.
to say they coming to me and say, "Hey, I don't know anything about credit. I want to learn. I want to build myself up, and I want to make sure I'm able to get whatever I need to get. You know, I want to get my house for my family and my kids or whatever. You know, because it's okay to mess up. And the thing about it's okay to mess up. And the thing about I also want people to understand is that Chris, life, our credit could be bad tomorrow.
Yeah. For sure.
So nothing else is embarrassing about it or whatever, too. You
Yeah.
know, for whatever client that, want to sign up with us or, want to come to you or whatever, like, really, your back end stories are nice and everything. But
Hmm.
man, look, we don't care actually what happened in the past. You know what I
Right.
mean? Don't When you sign up with us, we care about now and how we gonna make your life better in the future. You
There
know
you
what I
go.
mean?
Yeah.
Everything in the past don't even matter. Why this happened, why that happened, why this happened. No,
Right.
this what you need to do. I'm gonna do this on my end.
There you
We
go.
go knock this out the park or whatever, you know.
Right.
And that's, you know, and I know I jumped, but that's my ideal client or whatever, for them to understand and want that. And you know what's crazy or whatever? The clients that want that I notice are doing like a lot better than the clients that just want to get a car because they're in a tough spot. Because once you build the habit of learning how to to manage your credit, to manage your finances, to really think about what you're doing when you go get credit, like you really like, hey, I could afford that note, but you really think about, well, what am I actually paying for that car at the end of that term? You know what I
Yep.
mean?
Exactly.
Once you change that mindset and it goes to that, that's when you go really, really, really thrive with everything else, because your finances and how you save and how you spend money and how you manage money, all of it get better once you kind of really tone in down on this credit part. Because when you be like, okay, I'm gonna stay consistent on whatever credit bill whatever credit whatever bills I have, then you know you start staying consistent because you want to be on time. And then you
Yeah.
start looking at your other finances, and you know what, I'm gonna put a little money here and I'm gonna save it or whatever. Then you start writing your bills down, you know. So therefore, bro, like when people sign up with me and that's that type of client or whatever, they get so much more value than if they just be like, man, I want this scat pack. You know what I
Yeah.
mean?
Yeah. For
You know,
sure.
you get so much more value than that you could take with you for life, you know?
Right.
And that's what I'm about, man. You know, like, so really, you know, I got into this to help people um, you know, change their situation and really, you know, come from, you know, especially people that come from where I'm from, you know, the type of style that didn't know and didn't understand it or whatever, you know. And once I realized that, you know, I felt so low with my credit score, when it was bad or whatever, that I was like, man, I just really wanted to change everything about my situation. You know what I mean?
Right.
And mine, for me, it just started off with credit, you know. So once
Yep.
I started reading about that and I started being consistent with all my bills, everything else fell in line. You know what I mean?
Yep. Yep.
And I mean, I'm not perfect by far, but everything else fell in line. Everything else started making sense. Like, you know, the purchase that me and you talking about, like the 50-year mortgage, it makes sense to us why it's not important. You know what I mean? I mean,
Right.
why it's important not to do that. You know what I mean? The difference between a rent and a car, or, you know, why is paying $1,500 a month for a car, or, you know, you really saying, you're not trying to be mean, but it's stupid. You know what I'm
Yeah.
saying?
Yeah. It
Because we
is.
really understand at the end of the day. And you know, my side comes from me understanding that it comes from dealing with credit so much or whatever, and understanding what's going on, and actually looking at other people's credit profile, you know what I mean, and really, you know, just seeing what's going on and different patterns or whatever, you know what I mean. And the crazy thing about it is, I mean, I know you know this from doing credit, is you don't need to tell us a story, you know what I mean? Because your credit report tell us the story. We could
Right.
tell anything from your credit report. Like we could tell, you know, if you're going through a hard time through this during this time. We could tell like if you care about your bills. Like some people care about their bills and paying stuff on time, and they just go through a hard time and then they start paying it again, and we just need to help them when they went through that hard time, you know. Some people just don't care, you know what I mean? Some people don't know. So we could really get a good gist of who we dealing with, because the credit
Hmm.
profile tell a story.
Yeah.
I don't know if you look at it like that. What you think?
Well, I think to a sense, as far as credit reports telling the story, it definitely tells a previous story,
Yeah,
because it is
previous
the
story. Yeah.
past. And look, I tell this one, I tell a lot of clients this. Your credit report is your past, right? Everybody have a past. Just I think it's a Tyler Perry quote. I think it's like everyone has a sad story. Who cares? Work harder, right? So I
Yeah.
mean, once you get yourself in a situation, it may be due to poor financial planning to where you didn't think ahead and you maybe have gotten a vehicle or gotten some type of loan or used maxed out your credit card, and you didn't plan ahead, and then boom, life hits. Boom, there's an emergency. Boom, job
Mm.
loss. And then
Yeah.
that's what's going to cause those late payments, credit score
Hmm.
drops, credit report, negative accounts, and things like that. So yeah, it definitely tells a story. It tells a previous story, but look, your credit report is messed up for 7 years for
Hmm.
those items to report. Within those 7 years, this person may be a whole different person by 6 months later, 8 months later, a year later. They look at things differently, they move differently, they decide things differently. So, someone that have items on their credit report could be a completely different person from what they learned from. I think Dave Ramsey, for example, he was real big into financing real estate, and then he went bankrupt and things like that. Now, I'm sure at the time his credit report told a story based on what he did years
Hmm.
ago, and then
Yeah.
now the guy owns several billion worth of real estate, and apparently don't have a mortgage on any of it, or don't use investors, or just use all his cash capital, whatever it is. So,
Yeah. Yeah.
which I could be wrong, but apparently what they, preach online, that's what they believe in now. So somebody can be a completely different person today than what they were,
Mm.
a year ago
Mm.
based on
Yeah,
what their
most
credit
definitely.
report.
Yeah, yeah, most definitely. Oh yeah, most definitely, man. Most definitely, because at the end of the day, like our people don't know,
Yeah.
people don't know.
Yep. Let me ask you this. Speaking
Yes.
about financing cars, there's a lot of people who try to reject some of the things I say about financing vehicles are stupid. A lot of people are like, oh, well, I'm going to use my credit, especially if I have a good credit score. I am going to go get a reliable vehicle opposed to something I can afford to buy cash. Do you think that's a little bit crazy to a sense? Because look at it this way: if you go out and finance a vehicle, you're paying interest, that's costing money, but then
Mhm.
it's going to cut into your cash flow every single month. And man, these cars, they're $600, $800, $1,000 a month, depending on the type of vehicle they get, opposed to if they go out and just save 5, 10, 15 grand and they can just buy something cash. So what if something breaks one time? I still, in my opinion, believe that is much cheaper than paying $800 every single month. So I think that's almost, to a sense, telling on yourself. That's telling on yourself to where you're admitting you do not have the available funds to go out and buy a cash car because
Mhm.
you may not be disciplined enough. You may not have the available cash flow due to bad debt. So that way you don't have the savings to go out and buy a cash car. So now you're admitting to wanting to use your credit to buy a vehicle, which is going to cut into more cash flow. That's going to put you in a worse situation whenever that breaks, and that's out of warranty. What are you going to do then? What are you going to do if you buy a used car and you're financing it and it's already out of warranty? So I think when people say they finance a car because it's more reliable than a cash car, I think to a sense that's telling on yourself that you're not set up financially to have available funds to buy a car that's 10 or $12,000. Yeah,
Yeah.
something that's 10 or 12 grand, maybe over 100,000 miles, but it's not guaranteed that it's going to break.
Yeah. Yeah.
I've had several cars that had over 100,000 miles on it, and it ran fine. The AC may have went out, but I mean that's what, $2,000 to get fixed with a compressor, labor, and all of that
Yeah.
stuff. And I mean, you're paying what, if you have a $600, $700 car note every single month, that's what, $8,000 a year. So I
Yeah.
mean, what is a $2,000 repair? I think when people say they use their credit to finance a car, is realistically an excuse to a reason why they couldn't or they didn't buy something that was cash. And I think a lot of, and it may not be that all the time, but there's could be situations to where people can misunderstand comparing the math side by side. Yeah, if you buy this car for $12,000 cash and the AC goes out, yes, that's going to cost $2,000 or $3,000 to fix. So does that mean you should automatically opt into a 600, 700, $800 car payment to where you're paying $8,000 a year? That's almost replacing the AC in the vehicle 3 times a year. You see where I'm going with that?
Oh yeah, most definitely, man. I already do that. I did that or whatever. I was doing that just right recently when I purchased a car. You know what I mean?
Yep.
It's like, and that's why in the back of my head, I could have got my car fixed for, I think they wanted $3,000, right?
Right.
2,500 to 3,000. Okay.
Yeah.
If I'd have, and then I was like, okay. I could have paid that to get the car fixed, right? And that's why I'll be like, man, it was a bad decision. I wanted this car, but it was a bad decision.
Yeah.
4 months or whatever, that car would have got fixed and worked the rest of the year.
Yeah. Just that
You
simple.
get, and I paid, and you know what else? I mean, when you have an older car, some people you don't have to get full coverage insurance.
Yeah.
So
Yeah.
really, 2 months, 2 months and a half, I could have got that. Two
From your
months and a
car
half,
payments.
3 months, all that together, I could have got that car fixed, been riding for a year.
There you go.
And the thing about it is, and this coming from a person that fixed credit.
Yep.
You know what I mean? And you know how honest our conversation is. If you wanted a car right now, we probably discouraging you from coming fix your credit to buy a car. But
There you go.
honesty is everything. You know what I mean?
Yeah. Yeah.
Um, Man, look, that's most definitely is true than what you're saying, because I'm telling you, that's why I'm thinking like that. I could have had my little car fixed, got me everywhere I'm going. You know what I
There
mean?
you go. Well, man, I think that's all for this episode. We've talked about a lot of financial topics and gotten personal with a lot of our conversations here. And for any of our audience that's listening to this episode, they see that we're not just spitting out some random answers. They clearly see we're giving our true personal answers and some personal life experiences with a lot of these answers, man. So
Oh
I
yeah, most
definitely
definitely.
appreciate you for joining the It Pays to Have Good Credit podcast, sharing some of these topics and personal experiences, man. We definitely talked about a lot. We gave some honest feedback on some situations. We talked about some of the crazy things that goes on in the credit repair industry. So
Hmm.
I think we just about shared everything, man. And for anybody that's listening or watching this episode, be sure to comment any additional questions or any topics that you wish for any of us to speak on. We'll be more than happy to go over some of those topics that you may have questions on. But other than that, that's all until the next one.
Stirgus Credit Repair. Stirgus Credit Repair. If you want a new house, call us. If you need a new